There have been a slew of big deals this year, of course. Bristol and Celgene, Oxy, Anadarko, BBT, and SunTrust. But those larger, almost mega deals, they may be overshadowing what has been a weaker M&A landscape overall for 2019. Global M&A volume, in fact, dropped 19% compared to last year, despite the number of $20+ billion deals that have been hitting an all-time high. So here to explain what it means and what we can expect to see for the remainder of the year, Mark Shafir. He's Citi's co-head of global mergers and acquisitions. I don't know if we got you on a semi-annual basis, but we get you maybe once every 8 months or so. Nice to have you.
Good to be here.
Big deals, but not a lot of deals. What can we expect for the rest of the year?
Look, I mean, you got to look at it this way. A lot of talk about how big deals are really driving the market, and they are. $20 billion plus record levels back to 2007. You got to go back that far. Transaction values under that are down substantially, so it's not a particularly healthy market. But the flip side of it is it's the fourth fastest start in history, second fastest start since the crisis, so it's not all bad. When I spoke at Tulane in March, I talked about 10 to 20% down. In volumes, I'm probably towards the lower end of that, maybe a little worse because it was predicated on a pickup.
And we haven't seen it.
In the 1 to 5.
What does it mean, though, Mark, when you don't see the number of billion to $5 billion deals? What is that a reflection of?
You know, look, it's hard to say. It could be confidence. I mean, look, what's, the bad here is, as it were, you've got a macroeconomic situation, the China trade stuff, now Mexico tariffs, fragmented politics in Europe. So there are a number of things that are problematic. That's translated into a narrower market. It's been very dependent on the U.S. U.S. is now down 11%. It's also very narrow from an industry perspective. Only 3 of the 9 industries we cover are up in volume: industrials, energy, and technology. So from that, regionally and from an industry perspective, it's a narrower market than you'd like. That having been said, we're still getting the large transactions. May was actually a pretty good month.
You think we're going to keep doing that? It's funny. I sat down with Ken Moelis right here a couple of weeks ago. Of course, runs a company that's also very much involved in M&A. He wondered whether we're going to see a slowdown in the big macro, in the bigger transactions as a result of the macro fears, some of which you just outlined. Do you?
Look, I mean, it's certainly possible. I mean, you can't. It's still ticking along. It's not bad, as I said. But you've got to look at, what I think are potentially bigger clouds on the horizon. And yes, it could get worse. You got the summer coming up. It typically slows a little bit in the summer. What we need is a pickup in the sweet spot, the 1 to 5, $1 to $10 billion, and we haven't seen that. And to your point, without it, it makes it very difficult on a year-over-year comparison basis to believe that the numbers are going to get any better.
Right. I mean, all right, it's not often that a CEO is compelled to do something. Sometimes they are. Strategically, they just have to. Maybe the payments industry is one example where we've seen all these deals. But what about CEO confidence right now? I mean, you get a tariff potentially on Mexico. You've got a trade war with China. You've got some concern now about the consumer. It would seem to me, but I want to hear obviously what you're hearing, that CEO confidence may be waning a bit.
Yeah, look, is it at an inflection point? I don't know. I don't know the answer to that. We're still seeing big deals, transactions that ultimately have been on a list become actionable. The scarce real estate argument stuff's getting done. Do I think it's actually starting to permeate the conversations in the boardrooms and with senior management about what the outlook's going to be and what could happen to GDP growth? Yes, unequivocally, it's starting to come into those conversations. But again, look, we're still seeing big transactions, and I don't necessarily see that.
You seem to want to try and be positive, but you really can't be that positive. It's okay. It's all right.
Listen,
I mean, I know you got a job to do.
I'm reasonably positive. I'm not, look, I'm always pretty conservative on this stuff, as you know.
You are, but you've generally been right. I do want to talk to you about one of the bigger deals of the year, of course, that you were involved with, that Citi was involved with, advising Oxy on a successful foray to acquire Anadarko. Carl Icahn comes out last week, fires away with a couple of complaints, potential lawsuit, wants books and records, says you're paying too much, you put on too much leverage, that 8% coupon Buffett's getting is ridiculous, and oh, by the way, the price of oil could be going down and all of this could be in real trouble. What do you guys say?
Look, David, transactions aren't measured in weeks or in a couple of months. They're measured over the long term. The one thing I do strongly object to is the notion that the board and management hadn't fully vetted this, hadn't observed really good due process, which they did. So this is very well thought out, and I think you can't measure this, now or over the next few weeks. You measure it over a longer period of time. I can tell you that from the standpoint, my interaction with the management and the board, it was extremely deeply thought about, and it's a transaction that there's a lot of belief will lead to very good things.
Yeah. Now, he seems to be saying, well, sell the company once you actually combine. Is that a possibility?
David, it's great. We will talk about, let's go sell Microsoft. Let's go sell this. I mean, these are publicly traded companies. They trade every day. If somebody wants to show up on somebody's doorstep, they will. I don't know how to react to that beyond that. There's certainly, there's nothing really to say.
Right. Well, Vicky Holub, the CEO of Oxy, was very aggressive. I would assume you would agree. And certainly it would seem is making a very important bet that she can integrate this asset and get what she needs to out of the Permian in a way that is going to obviously reward shareholders.
Yes, unequivocally, Vicky is an engineer. She has really done it, literally at out in the field at the rig level. So her engineering background is as you saw when you talked to her, is really, really strong. Her management team is strong. They've got a lot of belief. So as I said, you judge these transactions over years, not weeks or months.
And Anadarko may have been worried about you guys being able to get a shareholder vote. Do you think you could have gotten one? Would you have, if you had needed one?
I think we probably could have, yes. But, this is all, at this point, it's a moot point.
Well, it was one of the more interesting fights and a successful one, of course, so you have to be happy with how it ended up.
Well, listen, I think it ended up in the right place.
Yeah. Back to the bigger picture here. Any industry that you anticipate will start to see some activity heat up in the second half of the year?
We've seen a little bit more activity in media and telecom in May, but that's, off a fairly low base. So that's the place. Look, what's driving all of this? I think activism's not going away. Tech disruption is driving technology. And look, we see the sponsor activity picking up, more shifting to the buy side, a little less to monetization. I think the last 3 months we've seen $20+ billion transactions each of the last 3 months from the sponsor side, so that's healthy.
Right. Regulation, though, would seem to me to be a difficult thing to monitor or to figure out at this point. Not just CFIUS here or antitrust, but what if you're trying to do a tech deal and you require Chinese antitrust approval?
Listen, we saw 2 semi-deals in the last week.
I know, but there were foreign buyers. I mean, Infineon was a foreign buyer for Cyprus.
Right.
What if you're a U.S. buyer? I mean, if you're a board, can you really step up and say, oh, yeah, we're going to take that risk?
Unquestionably, it's being thought about. You have to think about it. It's not just, can you get it done at all? It's, do you want to hang out for a year, potentially 18 months or even longer because of the business issues that surround that? You're taking your eye off your current business. So it's hard to say, but it's clearly a deliberation. Whether people will do them or not, I mean, a lot of it comes down to, again, how compelling is the opportunity? Has it become actionable for the first time in a long time? Will it get taken off the table? But I think, look, a year ago, the semi business, as an example, was dead. Now we've seen a couple of transactions, admittedly, with offshore buyers, but we'll just have to see how this plays out.